What is impact investing? That is the subject of today's edition of Inside AB. I'm Jeremy Lawrence and I'm joined today by Eddie Taylor. So Eddie, you've been writing about this subject this week, had some conversations with this guy, I believe.
Yeah, I chatted to this guy, James Gifford, who's head of impact investing at the bank UBS. He's been on a tour of the region. He's been sort of talking to institutional level investors about the opportunities of impact investing, which is basically a way in which investors can align their money and their investments and their portfolios with their values. So, you know, it's looking at companies that place sustainability at the heart of what they do is really what it is, and they can do that via funds or even offering direct investment into companies that that really kind of tick all of the sustainable boxes.
Okay, is it just a new buzzword, same thing as ethical investing?
I mean, there's a lot of kind of congruence there. I mean, yes, it is a form of ethical investing, but James breaks it down into a pre-2006 to a post-2006 environment. The movement up to 2006 was really about values, in the sense of you were making a choice not to invest here, not to invest there, dependent on what kind of activity that business was invested in. And then post-2006, it was really about identifying sustainability as a means of, as a way of identifying companies that were future-proofing themselves. So it's, you know, good practices within their businesses to kind of cut down on emissions, to cut down on waste, to cut down on supply chain loss, but also to look after their employees, treat their employees with a degree of respect and care that meant they would retain the best talent. So sustainability was actually seen as a cutting sort of edge, an advantage in the way that they were operating. So there's been a slight shift in that movement.
Okay, so working right across the board as well. And it's not new, is it, actually?
No, it's not. I mean, it goes back 100 years. The Quakers, it's believed, were the first people to operate and open a mutual fund that divested in anything to do with weapons manufacturing. And that was to do with, you know, their own pacifistic beliefs. In the 70s, it was about not doing business with anybody that had a relationship with apartheid South Africa. In the 90s, that moved to not engaging with anyone dealing with sweatshops and things like that. And then there was an environmental thing that came in at that time as well. But it's very important that the companies that we're talking about here, or that UBS is talking about, it's not simply the areas in which they operate. So it isn't just solar-powered companies. It isn't just kind of microfinancing in the developing world. It isn't just educational NGOs, although that is sort of part of it. This is really about how companies operate in whatever sector it is, how they treat their employees, how they sort of act as good neighbours and good community citizens. And it's believed that those practices will future-proof them into the long term. So it's not, you know, it's smart investment is how they're looking at it now.
Okay. Well, this is all very nice, but what about the results? Are we getting a return on investment here?
You are, if you do it properly, yes. I mean, there have been countless studies, sort of over 2,000 that have done, and they've actually said that of all of the kind of businesses that we're talking about now, I think it's 60% have had very positive returns, around about 30% have had sort of neutral returns, and only 8% have experienced negative returns. So this isn't just about making you feel good. This is actually a way of identifying businesses that are built for the long term.
Great. All right. Thanks, Eddie Taylor. So that's impact investing. It works. So please do join the conversation below. Subscribe to our YouTube channel and join us every weekday at 10 a.m. Thanks, and we'll see you next time.